Hello and welcome to United States Chart Company online video trading lesson. I'm Jim Prince, aka Trader Jim, and I'm your host for these video sessions. This weekly instructional video is offered to all US Charts online subscribers absolutely free. Let's get started with today's session. Welcome to this week's training video. This week I thought I'd do a little recap of our February chat. I haven't yet had a chance to do that, so there are a few questions that actually jumped out and caught my eye, so I thought I'd go over those today. And so, let's go ahead and get started. Here, the first question you see is from Paulie, and Paulie says, "Hi Jim, I too appreciate your time to teach us all you know. You make it look so easy. I find myself in situations that I jump on a trade which then goes against me, and sometime later, if it comes back, the same option could be had for less money. Do you sometimes wait a few days before getting on board, even though you may miss a trade?" And I said, "Hi, Paulie, absolutely. I have no problem waiting for the market to come to me." And this is something that actually took a while for me to learn. You know, one of my weaknesses used to be impulse trading. In other words, you see the market start to move without you, and you just jump in on impulse. Really no basis for it other than you're afraid you're going to miss the move. And you have to learn to get by that. If that is one of your weaknesses, you have to learn to recognize it, and then you have to learn to relax and let the market do its thing and have patience. And being patient in this business is a real key. I mentioned at the trading camp that I just did this weekend that patience is such a key, and one of the gentlemen there actually had a kind of a funny remark, but in a way it's kind of typical of how we all approach the markets, and that is, he said his idea of patience was an hour instead of several days or several weeks of waiting for the market to come back to you, and instead of chasing it. And I think we all have a tendency to want to chase the market because we have that fear of missing the move. You know, there are two really big emotions that get wound up in a trader's mind and make them do irrational things. For instance, fear of missing the move. So you chase the market, you end up buying at the top, you're left holding the bag because then the market sells off. Or greed. You know, you just absolutely got to be in the market because you're afraid that if you're not, going to miss your chance at riches. And so you got to learn to let greed go, and you got to learn to let the fear of missing the move go. Don't worry about missing a trade. In fact, this week on our premium alert videos, actually we've been following a couple of different markets in the currency sector, and these two particular markets actually gapped up above our potential entry points. And I mentioned to the viewers that I was going to wait for the market to pull back to where I wanted to get in at. And if it didn't pull back, then I would just miss the move. Well, a couple of days, the market started to pull back. And then on Wednesday, the market jumped back up again. And it pretty much looks like, at this case, it's a lost cause. In other words, I'm not going to be able to get in at my price because the market has just moved so far away from our entry points on those particular setups. And I'm fine with that. You know, you have patience. You let the market come to you. If it doesn't, so what? You move on. There are a lot of other opportunities out there. And I want to try to take as high probability of a position that I can versus chasing the market and trading off of hope. Here's a good question from Ready to Win. He says, "Hi Jim, hope you're having a great night. I noticed on the alert and the It Just Happened emails and alerts, you mentioned that when a trigger has been met, you say possibly a paper trade. At the risk of really sounding stupid, is there a different trigger, etc., for real money trades?" And I said, hey, you know, that's a good question. I say that because it's up to you to decide whether or not you want to paper trade it. Paper trade or real money, a trigger is a trigger. So I hope you understand that. I always say paper trade because we're not an advisory service, and I'm not an advisor. What I'm trying to teach you here, and what we are trying to teach you here as a company, is that how you can learn to trade for yourself. And by pointing out the triggers, instead of giving you exact prices and so forth, that allows you to see these opportunities materialize, or how to reduce your risk, or how to place a stop loss to prevent, you know, a trade from getting away from you. So anytime we mention anything, it's all on the basis that you have to learn for yourself based on your own personal criteria, which could be your risk tolerance and your budget that you're working with and so forth. Those things all come into play when you're trying to decide whether or not to take a trade. And far be it for me to tell you how much to risk in a trade and whether you should get in, or how many contracts or options you should trade. A trigger is a trigger. So if the prices trigger a breakout, for instance, of a pennant formation, I will say, triggers a paper trade, because paper trade is practicing. And that's what we're all about. And the next question was posted here by Slazan, and it just kind of is a follow-up to the paper trade one that I just spoke about. Here, this person talks about hope, fear, and greed, which are the three biggest enemies of traders. And in fact, as you can see here, let's see, this person says, "Hi, Jim, hope, fear, and greed, as you have beat into my head, are the three worst emotional enemies to a trader." I had a cash trade in the April crude put option. Profit sailed to over $5,000 in a short time. Then the market began to retrace. Still got out at 850 net, but a few thousand more would have been nice. Why didn't I jump off the boat? Because I didn't stick to my plan because of emotion. Thanks for the warnings that are finally sinking in. And a trading plan is so very key to helping pummel these emotions. You put it down on paper. Don't keep it in your head, but put it down on paper. Stick to it. Read your plan every time before you place any of your orders with your broker. And a plan is simply, hey, why am I getting into a trade? What am I going to do? Where am I going to get in at? Where are my stops going to be? Where's my profit target going to be? Have all that written out ahead of time, and hey, what am I going to do if the market starts to move in my favor? Where will I place stops? How will I trail it? Will I use support and resistance? Will I use a dollar amount and so forth? All that should be written out for every single trade you do. And that will help squash these three emotions of hope, fear, and greed. Of course, there's going to be more to it, and of course, you have to do it. Saying it is one thing, doing it is another. And our final question here was from Paul, and he said, "Tonight the Trend Seekers corn month is December. Why so far out when there are still May and July corn charts?" Well, my answer was simply, this is a normal occurrence of Trend Seeker. Remember, the front month contract is the contract trading the most volume and the most open interest. Right now, and of course this was in February, on February 13th, December is the lead month. To see what I mean, click on the Quick Quotes tab and then locate corn. Look at the open interest for all the markets listed. And of course, at that time, December corn was the highest. It had an open interest of 368,853. And I also mentioned that this happens quite often in euro dollars. Right now, we are in March of 07, and the front month market for euro dollars is December. Here's what I mean. Here's Trend Seeker updated Wednesday, March 21st. I'm doing this video on Thursday, the 22nd, in the early morning here. And if we scroll down here, we can see euro dollars, and the front month is December of 07. Yet let's look at some of the other contracts that are available. And here you can see now some of these months are serial months or hedging months. Basically, the big months for euro dollars are March, June, September, and December. And you can see that right now we are in March, but June isn't the front month right now, and neither is September. But the December contract is, and that's where all the volume and open interest is. All right, that's going to do it for this week. Just a quick recap of some of the questions that jumped out at me from our February chat. And here in a couple weeks, I will do a follow-up on our March chat. So if you need any assistance, though, in the meantime, be sure you call one of our course counselors. They can be reached Monday through Friday from 8:30 to 5 Pacific Time at 541-955-2885. I'm Jim Prince. God bless, and have an incredible week.